So we have another question in from Ryan, and Ryan's question is, what does the low jobs report mean, especially since it was lower than expected?
Yeah, okay, so all week they've been talking about the expected number of new jobs to be reported today for April, for last month, was supposed to be around 1 million. And we've been pretty much coming in higher than expected on almost everything, to be honest. And then there was a lot of talk and rumors and articles about the possibility of coming in much higher than that, 1.5 million or 2 million. And then there
Mm,
was all kinds of concern about that because that would be a lot of jobs all at once. The Federal Reserve might have to start raising rates, which the market doesn't like. So now we had just the opposite today. A pretty surprising number, 266,000 jobs. And that is the biggest miss compared to the expectation since 1998. And so there's actually a whole bunch of factors that are coming in there. And they're all a little bit different as to how you look at them, but people are still getting an extra $300, from unemployment insurance per week. That goes through September. Maybe some people don't want to take a job because of that. People are afraid of the virus, as far as that goes. So the jobs are there, but they're not really being filled as quickly as possible. Although there's one other key area, and that's that I read an article that says roughly half the kids that are in school are still at home. And so obviously it's somebody's probably at home with them, and they're not taking a job because of that. So that needs to clean up. But there have actually been some job shrinkage that happened in April because of shortage of certain types of supplies. Like in the automobile industry, 27,000 jobs disappeared, at least temporarily, because of the semiconductor shortage. And so they're having to cut back on the number of, cars and trucks that they're making. So uh, now the market is pretty excited today. If you look, there's a tremendous amount of green, and the market took off as soon as it saw that number, which seems counterintuitive, right? Why would the market go up when unemployment wasn't as good as when employment new jobs weren't as good as expected? And really, it's because the market looks at kind of like Goldilocks. They don't want an economy that's too hot, don't want one that's too cold, want one that's just right. And so having a little bit less jobs right now takes some of the pressure off of having an economy that might be too hot and the market just jumps. So you can tell how important potential inflation is to the market and what the Federal Reserve might have to do by looking at what happened today. So it's a weird thing. Bad news was good news to the market in the employment arena, and it wasn't negative jobs because that 266,000 were lost. That could be so. It's still a fair amount of jobs added. It wasn't what was expected, and I bet you anything though, next month could be a big makeup, and we might see some big numbers, but we'll see.
Do you think the consumer data just spending is going to start shooting up because do you think the jobs will lag behind that kind of in the reporting?
Yeah, they're having a hard time getting all the people into these jobs, and people are, you're reading stories about like restaurants are putting signs up saying, please, bear with us, we're having a hard time getting new people into work. Please be nice to the people that did show up. And so, yeah, I think that pent-up demand is going to come out really strong, and that, again. And one thing that was part of this jobs report is they actually increased wages by 0.7%. So as an attempt to, attract people out of their house, they're starting to pay more, which is a good thing altogether. But then that's another inflationary, potential too. So lots of interrelated pieces. But yeah, consumer spending is going to be the driver there.